Well, since the Dow first hit 10,000 in 1999, not every Dow stock is higher. Can you believe that? GE, Pfizer, and Merck actually all lower in that time. Could any of these stocks now make for attractive buys? Mark Tepper of Strategic Wealth Partners, Craig Johnson of Piper Jaffray are your guests. Listen, GE had its own issues with GE Finance. Craig, Merck, and Pfizer. We know the big pharma growth has really slowed down. Biotechs have taken a lot of the attention. Do you think any of these three names are sort of either undeserving of what's happened to them and thus then deserving of our viewers' new money buying them now?
Well, Brian, just purely based upon the charts, you look at something like Pfizer, you're still about 44% below where you were in March of 1999. I mean, when you speak of dogs of the Dow, this has clearly been a dog at this point in time, and so is GE, and we continue to think that these names, there's better places to be than these three at this point in time. I'd also just point out that Merck and Pfizer in the healthcare sector, just want to remind the viewers that healthcare is traditionally a defensive sector, not an offensive sector. So I'm not looking for a lot of catch up in these names right now. I'd rather be buying tech, I'd rather be buying energy, and also basic material names, Brian.
Okay. Mark Tepper, Pfizer, Merck, GE, any of those you like?
Yeah, we like Pfizer. We do own it for clients. It really fits the profile of what we're looking for from an investment perspective. So, number one, it's undervalued. It's trading in the $32 range, and we feel that fair value is at about 38 bucks. It's got a forward PE ratio of 12. The forward PE on the S&P 500 17. So the valuation metrics are definitely attractive. They continue to increase the dividend. We're looking at a 4% yield now. And when you look at the performance of different sectors after a Fed rate hike, the best performing sectors in the 24 months following a Fed rate hike are the defensive sectors, not the cyclicals. The number one performing sector would be the consumer staple sector. Healthcare is the number two performing sector in the 24 months after that Fed rate hike. We like Pfizer. We think that, while a lot of the big pharma companies have had some innovation problems, when you can't innovate, sometimes you need to buy innovation. So their growth by acquisition strategy seems to be working pretty well for them, and they do have some good products in the pipeline right now as well. So we think Pfizer's a buy. Okay,
Pfizer getting a little bit of love from Mark Tepper, Strategic Wealth Partners, Craig Johnson of Piper Jaffray. Guys, thank you both very much for your views. Hard to believe that that it's been that long and these names on a net basis, from a return basis anyway, are down. Guys, thank you so much. Folks, thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.